Hey guys, what is going on? Welcome into the video. So we had a very volatile week in the stock market last week, and in this video we're going to be going over what played out and what to expect next week, including the key levels to watch and what needs to happen for this pullback to end. Also going over a bunch of trade ideas. As always, there are timestamps in the description. Now let's go ahead and get into it. So starting out by taking a look at the S&P futures chart, the market finally pulled back last week after failing to hold above the key 5240 to 5247 pivot zone, and it made it to the next support zones below at 5180 to 5193 and then 5150 to 5158 on Friday. This will be a very important decision point for the market, as it is also slightly above the 50-day moving average, which is currently at 5146, and this will be the first time that the S&P has tested it since November of 2023. So we have to think that there is a good chance for at least a relief bounce off of this area, but if there was a break and hold below the 50-day moving average, that would be a signal that the market is headed for a deeper pullback. An important pattern that has formed is this descending channel that could also be looked at as a large bull flag that has built out. The trendline resistance on the upside is what can end this pullback on a break and hold above there, and that could lead to a large breakout in result if it sets up correctly. I would not put as much weight on the trendline support below, just because it is not as well defined as the resistance and it can be adjusted if needed. Just for example, before Friday's sell, this is how I had the trendline support on the chart, which ended up breaking down. So overall, next week will be a very important one to see how the S&P holds up at the 50-day moving average. My personal lean is at the minimum we'll see a relief bounce or a large gap down that gets bought up, but as always, it is best to stay relatively unbiased and to have a plan on how you will trade each direction. And I don't want to get too much into geopolitics, but if things do escalate, you generally want to look to buy any large dip. Historically, buying the invasion has worked very well for stocks. Alright, so now getting some trade ideas for the week ahead, starting out with Tesla stock. So Tesla has been building out a tight consolidation base for more than 5 weeks and is looking primed for a directional break soon. So the key levels to watch on this are at 160.4 as key support on the downside and the current double bottom. If it breaks below there, this is a short setup for the next leg lower, which can target the gap fill at 146.5 next. On the upside, 180 to 182.6 is the key resistance zone and breakout trigger above there to break out of this range. Breaking above there can target the top of the previous range at 205.3 to 205.7, and the 50-day moving average also lines up with this resistance zone, which can make that move that much more explosive if it is able to break to the upside above it. Another top watch for me in the week ahead is Coupang, ticker symbol CPNG. So this stock has been basing for over 2 years and is testing the top of the range, which can potentially start a large time frame breakout out of this range. So the top of the range is well defined at 21.32, which is also that gap fill level from 2022, so it needs to break and hold above there in order to start the breakout. And the initial upside targets to watch above there would be at 21.82, 23.7, 25, 30, and 31.91. And something else is, Coupang made this large move on Friday with heavy volume on a day when the major indexes were all down about 1.5%. If the stock did this on a day when indexes were green, this may have been more of a 20% move instead of an 11% move, so relative strength is very important to note here on a day that the market was very red. Another one that I'm watching is Coinbase, ticker symbol COIN. So Coinbase has been one of the strongest stocks in the market this year and is finally seeing a healthy pullback / basing period, which has been doing between 207 and 225 support and 281 resistance for 6 weeks now. So I'd be interested in this as a potential dip buy if it gets a deeper pullback to the 50-day moving average, along with that support zone below. And if so, we would want to see a strong reaction from buyers there, which can set up a strong move back to the upside and result. And another that I'm watching with almost exactly the same setup is Robinhood, ticker symbol HOOD. So this went on a large run and now has started its basing / pullback phase after rejecting off the 20.6 resistance. So key support below is at 16.5, which the 50-day moving average is also nearing. And similar with Coinbase, if it pulls back further and the 50-day moving average lines up with a 16.5 support and that gets tested, that would make for a very attractive and high reward to low risk entry opportunity to set up a leg higher in result if it gets a strong reaction from buyers off of that spot. And one stock that we went over last week that ended up breaking out nicely was Transmedics Group, ticker symbol TMDX. So we went over how 90.3 was the key resistance and breakout trigger out of this 1+ year long inverse head and shoulders pattern. It broke out and is now nearing a back test of that level as new support. So if it's able to hold above from here, the breakout stays intact and it has a good shot to make a move towards new highs. One thing to be mindful of though is breakouts work best when it consolidates tightly right below the breakout level and then pushes through and breaks out. This setup did not consolidate before breaking, it just went right from $70 support to a straight breakout above. So a scenario that I'd be watching for this would be a quick fake out before re-attempting the breakout. So something like this where the breakout fails back below 90.3 and then hits some stop losses, and then that dip ends up getting bought up strong and tries the real breakout next time around. So if something like this plays out, the way to play it is to enter on the reclaim back above 90.3 and keep your stop loss tight back below there. There's no need to try to call a bottom in this case, because if the breakout fails, it would obviously just sell a lot further. But if it just undercuts like this scenario, you will often see a quick trap like this before the real breakout plays out. So it'd be buyable after a quick fake out and then a reclaim back above 90.3. And another stock that I'm watching in the week ahead is ONON, ticker symbol ONON. So this stock's been building out this large consolidation base for over a year now and has the look of a cup and handle pattern. So it's currently bouncing off the 30.88 to 31.2 support zone, along with the 50-day moving average, which is an important higher low if it is able to hold there. So if that holds, from here the next levels above are at 33.9 to 34.1, and then 35.66 to 36.85, which is the top of this long-term range and would be the breakout trigger above there. So that is what I'm watching for in the week ahead. We could see a volatile one, so good luck trading, guys. I'll catch you all next time. For anybody interested in joining the private Discord chat, that is first link down in the description to get my personal trade alerts, nightly watch lists, and answer any questions you have in there. I'll catch you all next time. Good luck trading this week, and peace out.